What do investment funds have in common with fat-free milk?
In the trading world, I found my way. In the trading world, I found my way. In the trading world, I found my way. In the trading world, I found my way.
Hello everyone, welcome back to the channel. Today we're diving into the latest insights from the SEC Chair Gary Gensler. In a recent interview with Bloomberg's Carolines in Washington, Gensler provided valuable updates on the SEC's evaluation on Bitcoin ETF proposals and discussed the potential regulatory measures. Let's unpack the key points. So on the Bitcoin ETF proposals, Gary Gensler revealed that the SEC is still in the process of evaluating multiple proposals, not just one but multiple proposals for Bitcoin ETFs. He further emphasized that the agency is carefully considering the potential approval of spot Bitcoin ETFs, with a notable focus on the current review of the 13 filings of potential exchange-traded products tied to Bitcoin. Here are some of the 13 companies that have filed or are vying for spot Bitcoin ETFs. At number 1, we have Fidelity, which has joined the race for a spot Bitcoin ETF as a refiler with a proposal that stands out due to its custodian, Fidelity Digital Asset Services. At number 2, we have the financial giant Blackrock, which has also entered the spot Bitcoin ETF race with a proposed iShares Bitcoin Trust that will be traded on the Nasdaq. At number 3, we have Van Eck, which has also been vying for a spot Bitcoin ETF and recently filed a proposal with the SEC, which included the HODL ticker. At number 4, we have other firms such as Valkyrie and Franklin Templeton, which are also vying for a spot Bitcoin ETF, and the SEC has met with representatives from the different firms to discuss the technical aspects of the fund proposals. At number 5, we have Pando Asset AG. Pando Asset AG is a digital asset management firm based in Switzerland, which has also submitted an application to the SEC to launch an ETF tied to spot Bitcoin, becoming the 13th company to do so. Gensler's comments shed light on the significant regulatory attention being given to the potential introduction of spot Bitcoin ETFs, which could have a substantial impact on the market and investor access to Bitcoin-related investment products. In addition to the discussion on Bitcoin ETFs, Gensler addressed the possibility of banning the so-called volume-based transaction pricing. He also touched on the consideration of new rules related to climate-related disclosures. The regulatory consideration reflects the SEC's broader efforts to evaluate and address various aspects of the financial digital asset markets. The SEC proposed new rules related to climate-related disclosures aim to enhance and standardize climate-related disclosures for investors. These rules, if finalized, will require registrants to include information about climate-related risk that are reasonably likely to have a material impact on their results of operations or financial condition, as well as certain climate-related financial statement metrics in and not to their audited financial statements. So what does this all mean for crypto investors? Number 1, we have increased transparency. The proposed rules will make climate-related disclosures more consistent, comparable, reliable, and easier for users to find. So this increased transparency and comparability will benefit crypto investors as they can make more informed investment decisions based on the climate-related risk and opportunities of the companies they invest in. Factors in investment decision-making is reflected in the SEC focus on climate-related disclosures. Crypto investors who prioritize ESG factors in their investment choices will benefit from the increased availability of climate-related information. Then we also have the potential impact on crypto projects. As traditional companies, crypto projects may also need to disclose climate-related risk and opportunities. The SEC's proposed rules could potentially impact crypto projects that have a significant environmental footprint or are involved in climate-related initiatives. Crypto investors should be aware of these potential impacts and consider them when evaluating investment opportunities. At number 4, we have the regulatory compliance. Crypto projects that are subject to the SEC regulation or are traded on US exchanges may need to comply with the SEC's proposed rules. This could involve disclosing information about their greenhouse gas emissions, environmental risk, and measures taken in response to climate-related challenges. In summary, the SEC's proposed new rules related to climate-related disclosures could have significant implications for crypto investors, as they will increase transparency and comparability in climate-related disclosures and potentially impact crypto projects with significant environmental footprints for those involved in climate-related initiatives. Gensler's remarks provide valuable insights into the ongoing regulatory developments and priorities within the SEC, particularly in relation to Bitcoin ETFs and the potential introduction of new regulations aimed at enhancing market transparency and addressing climate-related concerns. That's all for today's update on SEC Chair Gary Gensler's recent comments. As always, we'll continue to monitor these developments and keep you informed. Thank you for watching, and don't forget to subscribe for more regulatory and crypto-related content.
In the trading world, I found my way. 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 In the trading challenges come with me, with a calm mind and a steady head. I tread the path of the stoic brain.